Hello friends, welcome to Finance MCQ channel. Here we are bringing you some important MCQs and concepts which will help you in your exam preparation of PHEL Supervisor Trainee Finance exam. So friends, I hope this series of videos are useful and we wish you a great success for the upcoming exam. So let's begin and go through today's set of MCQs. So friends, the first question is, A purchases a certain quantity of black yarn from B, who is a dealer in yarn, and friends, A finds that the black yarn to be damaged by white ants. So in that case, dash has been broken. Well, the conditions are condition as to wholesomeness, condition as to merchantability, then condition implied by custom or trade usage, and option D, condition as to description, and last option, none of the above. So friends, in the present case, option B, that is condition as to merchantability, has been broken. So friends, condition as to merchantability specifies that when goods are brought from a seller who deals in those goods, then there is an implied condition that goods will be of merchantable quality. That is, the goods must match with the description that is generally known in the marketplace. Now friends, let's go and study the other options given in the question. So the first option given was condition as to wholesomeness. So friends, condition as to wholesomeness specifies that in case of eatables, the goods shall be fit for human consumption. Friends, next option is condition implied by custom or trade usage. So friends, this condition specifies that there is an implied condition that the quality of goods will meet the requirement, and if seller withholds any information or condition, then buyers can reject the product. And friends, option D is regarding condition as to description. So friends, condition as to description specifies that the goods must be same as were described by the seller. That means, suppose for example, if a seller is selling a particular wine and describing it as dating from 17th century, but later on a buyer found it from being 18th century, so in that case the buyer is entitled to reject the goods and claim damages. So friends, here goods does not correspond with the description. So moving on, next question is that when inflation rate is between 3 to 10% and people started buying more due to the fear of tomorrow's higher prices, that situation is called option E, creeping inflation, option B, walking inflation, option C, galloping inflation, option D, hyperinflation, and last option, none of these. So friends, in this question, the present situation is called option B, walking inflation. So friends, inflation basically refers to the rise in price of goods and services over a specified period of time. And there are various categories or stages of inflation. So let's understand them one by one. So friends, first was creeping inflation. So friends, creeping inflation refers to a condition where inflation is increasing slowly but continuously over a period of time. And here inflation rate is below 3% a year or less. And friends, walking inflation we have already seen in this question. Moving on to galloping inflation. And friends, galloping inflation refers to a situation where the inflation rate is above 10%, causing general instability of the economy as a whole. And friends, hyperinflation refers to a situation where inflation is beyond control of the authorities, and this is the last stage of inflation. Moving on. Next question, the maximum number of partners in a limited liability partnership as per the Limited Liability Partnership Act 2008 can be option A 10, option B 20, option C 50, and option D 200, and the last is no maximum limit. So friends, remember that as per the Limited Liability Partnership Act 2008, there shall be a minimum 2 partners, and friends, the act has not specified any upper limit as regard to the number of partners. So friends, here the correct answer will be option E, no maximum limit. So friends, also remember that as per Companies Act, there is a ceiling of maximum limit of 50 partners in case of a partnership firm. Moving on, which of the following allowances are not fully taxable? Option A, dearness allowance, option A, overtime allowance, option C, non-practicing allowance, option D, HRA, and none of the above. So friends, always remember that HRA is not fully taxable. So friends, HRA will be exempted to the least of the following. First is actual HRA received. Then second option is 50% of salary in case of metropolitan cities. 40% of salary in other places, and third option is actual rent paid minus 10% of salary. So friends, here least of the following will be exempted from income tax. And friends, also remember that here salary means basic and DA, that is dearness allowance. Moving on, next question is technological advancement in asset causing old asset to become outdated is a concept of option A depletion, option B depreciation, option C obsolescence, option D amortization, and last option none of the above. So friends, here the technological advancement is causing the old asset to become outdated. So friends, this is an example of option C obsolescence. So friends, depletion is used often in mining, timber and petroleum industry, while depreciation refers to the loss in the value of fixed assets over its useful life. And friends, amortization includes spreading an intangible assets cost like that of a patent, trademark over the asset's useful life. Moving on. Next question is any unclaimed credit amount in a bank account with any bank in India which is remaining unclaimed for more than dash years shall be credited to depositors education and awareness funds within 3 months of expiry of such time limit. So friends, here remember that if a bank is holding any unclaimed credit for more than 10 years, in that case it will transfer the amount to depositors education and awareness fund within 3 months of the expiry of such time limit, that is 10 years. Moving on, next question, what is the generally accepted quick ratio? Well, the options are 2:1, 3:2, 1:1, 5:3 and none of the above. So friends, the ideal quick ratio is 1:1, and what's its formula? Well, quick ratio is calculated by current assets minus stock plus prepaid expenses upon current liabilities. And friends, you should also know the ideal current ratio. Well, the ideal current ratio is 2:1. Moving on, NABARD stands for National Accreditation Banks Agriculture and Rural Development. The B option is National Bank for Agricultural and Rural Development. Then C option is National Association of Banks for Agriculture and Rural Development. Option D is National Accreditation for Banks, Agricultural and Rural Departments. And last option is none of the above. So friends, please remember that NABARD stands for option C, National Association of Banks for Agriculture and Rural Development. And friends, here you should also know the full form of some other important financial institutions such as SIDBI, then EXIM, then ICICI, and then IFCI, etc. So here SIDBI stands for Small Industries Development Bank of India, EXIM stands for Export Import Bank of India, and ICICI stands for Industrial Credit and Investment Corporation of India. And friends, IFCI stands for Industrial Finance Corporation of India. Moving on, next question is SWOT analysis is a framework used to evaluate a company's competitive position and to develop strategic planning. So friends, here SWOT stands for, well, the options are systematic work objective tool, then smart web oriented training, then option C strengths, weakness, opportunities and threats, option D series of work organization threats, and last option none of the above. So friends, remember that SWOT refers to option C strengths, weakness, opportunities and threats. So friends, SWOT is a simple and effective framework for identifying a company's core strength, weaknesses, opportunities and threat, and is very useful for strategic planning. Moving on, friends, next question, standards of audit SA 230 relates to option A audit evidence, option B audit documentation, option C agreeing the terms of audit engagements, option D, planning an audit, and last option, audit sampling. So friends, remember that SA 230 relates to option B, that is audit documentation. And as far as other options given in the question, audit evidence relates to SA 500. And friends, agreeing the terms of audit engagements relates to SA 210. And friends, planning an audit relates to SA 300. And friends, audit sampling refers to SA 530. So friends, well, these are some important standards of audits that might be important for your exams. So friends, for more practice of such MCQs, please visit our website financemcq.in, where the entire technical syllabus is brought to you in MCQ format for practice. And friends, this technical syllabus is very important for your selection, as it covers 100 marks out of the total 150 marks of the BHEL Supervisor Trainee Finance exam. So friends, this website financemcq.in presents 2000 plus MCQs covering accountancy, business law, costing, economics, income tax, GST, management in subject-wise or topic-wise format for you to practice. And friends, this content of financemcq.in is prepared by professionals such as chartered accountant or cost and management accountant, which gives this course a professional edge and in-depth coverage of the entire technical syllabus. Friends, we have added explanations for correct answers wherever required for conceptual clarity. And apart from this, there is an email support for clarification of doubts raised by candidates while practicing this contents. And friends, the system of financemcq.in is designed in such a way with timer facility so as to give the candidates a real exam-like environment. So do visit financemcq.in and practice for your technical syllabus well. So see you all tomorrow, friends, with a new set of MCQs. Till then, thank you very much for watching. Take care and goodbye.